This video examines Operation Decoy, a weekly market analysis. We explore how recent market moves, framed as a rotation, were actually a carefully orchestrated bait-and-switch. What seemed like a quiet session following Friday's pension rebalance was, in reality, a textbook decoy. Retail was steered away from semiconductors toward other sectors, while institutions moved back into the very assets retail dumped. The core takeaway: the 55 level held firm, and that was the pivot for the entire day. The narrative of a great market rotation failed to materialize. The session unfolded in 3 stages. First, a flush to scare retail out of their positions. Second, the baiting of the rotation. And finally, a sharp reversal where institutions reclaimed their positions. As flagged in our analysis on Saturday, the rebalance was intended to cause misdirection. Our advice remains: mark your key levels pre-market and do not follow the crowd. Section 1. The rebalance was the bait. We break down why Friday's scheduled event was merely a precursor to the trap sprung on Monday. To understand the event, recognize that index rebalancing creates forced mechanical flows. While the market narrative labeled this a flight from tech, it was simply calendar-driven selling. Retail was sold the idea of a market break and forced rotation. In reality, investors were dumping stocks trading at extremely low earnings multiples into institutional buyers. The principle here is clear. When the majority of retail is on one side of a trade, it is often the wrong side. Trust the tape over the popular narrative. Section 2 focuses on the decoy. We examine why the focus on healthcare and major tech leaders was a distraction that never offered true value. While healthcare and tech leaders were presented as the quote safe play, they lacked genuine momentum. Meanwhile, the semiconductor sector, which retail was told to exit, saw significant institutional accumulation. The Great Rotation failed to show. Amazon rejected, Netflix faltered, and healthcare remained stagnant, confirming that the market's internal mechanics were pointing elsewhere. The pattern is repetitive. Retail panics into a flush, while institutions use that fear to absorb supply at lower prices and push the market back to the highs. Contrarian math teaches us that selling assets at single-digit earnings multiples is rarely how market tops are formed. Look at who is buying, not just what everyone is saying. Finally, we look at the levels. Using volume profiles and key technical anchors like the 55, we can navigate the noise and identify where the real trade occurs. Why futures? Reading futures rather than cash markets offers consistent, continuous data. With NQ and ES running nearly 24 hours, you get cleaner levels and a better view of where true liquidity is built. By tracking the market structure live during the pre-market, you can map out your levels before the retail crowd enters. Remember, levels marked ahead of time are far superior to those chased in real time. To effectively use this method, distinguish between major and minor profiles. Major profiles are anchored further back, providing high conviction levels that the market respects most, because more history equals more weight. Minor profiles, conversely, are anchored to the recent session. They provide faster, more tactical reference points. A key rule: break the minor, and you know the major is the next destination. The setup takes just 2 minutes. Identify Monday's 9:30 action on the 1-minute chart, drop a profile on Sunday's move, check the 15-minute chart for the week, apply your major profile, and trade the break between. It is not rocket science. It's simply defining your anchors. By establishing your major and minor levels early, you create a clear roadmap for the trading day ahead. Once you have your map, you can observe how the point of control acts as a guide. When price breaks a minor level and fails to hold, that major level becomes the obvious target. Watch for the flip. The POC often shifts from resistance to support on a retest, providing a solid long trigger. When price closes right at the value high, it confirms the map was accurate. Levels drawn in the pre-market often hit to the tick. Up, rejection, support, and then clear skies. Closing on the level is the ultimate tell that your structure was right. Secondary reads like VWAP pain points add confluence. Anchoring a 4-hour VWAP from a major bar and a faster 5-minute VWAP from a swing high often highlights the same zone. This is confluence you can trust. That specific overlap often marks the peak rejection on the way up, but then flips to support once the price is through it. It's a powerful validation of your level. Sometimes, one line matters above all else. In a recent move, the 55 EMA was the hinge. NDX and NQ tagged it and held, proving the trend structure remained entirely intact. When price holds the 55, the trend is supported. A reversal off that line confirms the long. Lose it, and the entire read flips. One level can carry the entire session. The core sequence is undercut, reclaim, retest, and go. It's a process of grabbing stops and shaking out the weak hands before the real expansion move begins. It is a textbook liquidity grab. Some of these moves are predictable if you arrive prepared. Don't fight the levels. Respect them and watch the tape for the signal to act. Let's look at the MAG 7 trade. It faded, rejected repeatedly, and felt heavy. While there was a brief push, the price action remained below key levels, signaling that the crowd was being fed at the top. The best put-selling tape in years is here. With premiums this rich, opportunities appear once every several years. Whether you are selling puts into the panic or adding on the break, keep your process defined. Turning to crypto equity, MicroStrategy's recent 8K filing authorized a $1 billion buyback. Betting against that level of size and intent is a high-risk trade that few should take. Index inclusion triggers mechanical buying as supply is pulled from the market. For stocks like the one discussed, watch the IPOVWAP at 174 as the line to respect, with a likely peak zone near 180. Rocket Lab's acquisition of Iridium is a clean move, trading cash and stock for cash flow positive assets. Traders looking for a proxy are watching how this ripples through the sector. Cybersecurity remains a long-term play. While AI introduces new attack surfaces, leaders like CrowdStrike and Palo Alto Networks continue to show strength, driven by sustained demand from major institutional players. Now, let's review the playbook. Success in trading isn't about guessing. It's about knowing what to watch tonight, this week, and in every session that follows. The overnight tell is critical. Watch the Korea ETF or EWI after the bell. If it remains green in the pre-market, it signals that Korea is buying memory and tech, often pointing to the day's trend. This is a short week with a significant print on Thursday. Keep an eye on your setups Tuesday and Wednesday, and prepare for the volatility that typically accompanies the non-farm payroll catalyst. Discipline beats reaction every time. Walk in with your profiles drawn, have a plan for every major level, and never trade without an edge. Come in cold and the flush will eat you alive. The HPT way relies on 3 pillars: macro, fundamental, and technical. We don't trade based on feelings. We trade based on a framework, and we are always ready to admit when we are wrong. Looking at the scorecard, our map was accurate. We held the key levels, avoided the rotation bait, bought the flush, and hit our price targets. Precision in your entry is what keeps you profitable. If you want to know what the smart money is doing first, join us. From pre-market lives to our weekly deep dives, we teach a repeatable read of the market. Check the links below to connect. You can find all our resources on our website, YouTube, X, and Discord. We are committed to transparency and helping traders understand the mechanics of the market. See the links provided for more detail. Remember, the decoy only works on the unprepared. Stay focused, stay disciplined, and always trade by the rules. We will see you in the next session.